Today on the Blockchain Report, Bitcoin's at 106K and now the White House wants in. The US government confirms that it's buying Bitcoin, Barclays is banning it, and Do Kwon might beat the feds thanks to something called the Genius Act. We got all this and special guest Preston Pysh on today's show. Let's go! Good morning, my on-chain outlaws, ETF evangelists, and everyone whose retirement plan is just hold and pray. I'm Hank Hudson coming to you live from San Francisco, where your Uber driver has a seed phrase tattoo, your landlord accepts stablecoins, and your therapist thinks she can fix you and Solana. It's Friday, the markets are moody, the halving hopium is thick, and somewhere a Bitcoin whale just fat-fingered a market pie. Now, before we cannonball into this week's liquidity whirlpool and pretend macro doesn't matter, smash that like button like it's your ex's meme coin and follow RoxomTV and me at Hank at RoxomTV everywhere you waste time pretending to work remotely. Now, whether you're tuning in from a Dow-funded hacker house, a coffee shop full of AI bros, or your cousin's basement/mining farm, top off that cold brew, refresh your block explorer, and let's see what kind of nonsense the crypto gods served up to us this morning. But first, today's market rundown. Let's go. All right, it is Friday morning. The markets are moving and making, and let's see how things are looking right now. Bitcoin this morning just ducked beneath that 107 level. Currently, we're around the mid 106K mark. Ethereum up about $8 this morning. Not a lot happening. Currently sitting just above $2,400 a coin. XRP sitting at just above $2, right around that 207 area. Cardano down about a percentage point this morning, hovering right beneath 55 cents a pop, and Dogecoin doing a whole lot of nothing, sitting in that 15, 16 cent range. Not a ton of movement this morning, but that's okay. Let's hold strong for the weekend and close out on a high note. Right now in TradFi, the Dow Jones is up just about a percentage point this morning, sitting at a $43,760 area. The NASDAQ is up about $93. S&P is up about 0.5%. So not a lot of movement happening in TradFi this morning. Again, sometimes no news is good news, so we'll take it. MicroStrategy, they're up about $6. They are just beneath that $400 mark. Will we see them included in the S&P 500? We are waiting. I think they got a couple more days. Or as long as Bitcoin doesn't go beneath that 90K mark, they will be included. So that's exciting stuff. Coinbase down big this morning, almost 7%. We'll find out what's happening there hopefully in a little bit. They're down almost $26 this morning after reaching new all-time highs right around that 380 mark, but currently sitting at just beneath 350 a share. Tesla down a little bit, sitting right around 324, 325 a piece. Nvidia's up about $2.5 this morning, and GameStop sitting right beneath $24 a share. We got a lot to cover today, so what we're going to do is we're going to take a break. When we're back, we're going to start this morning's bull run, and of course, we have Preston Pysh joining us today to go over some stories and talk shop, so make sure you're staying tuned. All that and more when we come back on this morning's Blockchain Report. See you in a sec.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
All right, welcome back to the Blockchain Report. Currently, it's about 8:09. Bitcoin sitting at about 106,600 bucks. On today's bull run, we got a lot to talk about. First, the U.S. government isn't thinking about Bitcoin anymore. In fact, they're actively planning to buy it. Patrick Witt, the White House's Deputy Director for Digital Asset Policy and acting head of the Pentagon's Office of Strategic Capital, confirmed as much at the Bitcoin Policy Summit that a strategic Bitcoin reserve accumulation plan is not only in development, it's already begun. He described Bitcoin as a tool of modern statecraft, comparing its influence to America's post-World War II dollar dominance. Because nothing says geopolitical flex quite like sound money with a hard cap and no central bank hotline. He said Bitcoin is now presidential policy, not white paper theory, and called the asset a catalyst for economic growth, energy innovation, and financial inclusion. It's like someone read the Bitcoin Standard and actually took notes. Now, Witt's other job involves managing a Pentagon fund that already has $5 billion in lending authority, with a potential runway to $200 billion if Congress extends equity powers. So yeah, the military-industrial complex may soon be dollar cost averaging. He encouraged Bitcoin miners and grid modernization companies to see the government as a lender of first resort, or in other words, the feds are looking to finance the infrastructure behind your sats. Now, Witt also called on the industry to stop selling their own book and start showing up with real research to help shape law, which is a polite way of saying stop tweeting memes and start submitting PDFs. The Interagency Accumulation Plan, which includes input from the Treasury, the National Security Council, and the Pentagon's finance nerds, is due on the president's desk in early July. And the best part of all this, it reportedly doesn't need new appropriations, which means that Bitcoin could be, or soon be, a line item in budget right between foreign aid and billionaire bailouts. Now, Bitcoin traded at around $107,000 at the time of writing, and if Uncle Sam's buying, price support just got a 5-star general. And do you remember Do Kwon? I sure do. He's the guy who turned a $40 billion crypto ecosystem into a flaming crater of hopes, dreams, and poorly timed leverage. Yeah, he's still on trial, and somehow Congress might be doing him a favor. This week at the status conference in federal court, the judge overseeing Kwon's criminal case said he's mindful of the Genius Act. That's right, Do Kwon's legal Hail Mary might come from the bill called the Guiding and Establishing National Innovation for U.S. Stablecoins, or as it's known on the street, please regulate stablecoins before someone does another Terra Luna. The Genius Act passed the Senate, still needs House vote though, and awaits Trump's signature, which at this rate might get delivered via Truth Social voice note. But the reason it matters is, well, Kwon's entire indictment hinges on how stablecoins are legally defined. And if Congress changes the definition, well, he might not be a criminal, he might just be early. Now, Kwon's still facing 9 felony charges, including securities fraud, commodities fraud, market manipulation, and money laundering, also known as crypto bingo. He's pled not guilty and is being held without bail, and his trial isn't set to start until January of 2026, which gives him plenty of time to rebrand as a misunderstood innovator who decentralized too hard. Now, Judge Paul Engelmayer also hinted that the previous SEC civil case, where Kwon and Terraform were found liable for defrauding investors, might not automatically carry over to the criminal case. So now we've got new legislation, a flexible legal interpretation of securities, and a guy who once tried to disappear in Europe with a fake passport, and somehow he might come out of this looking like a victim of bad timing. Only in crypto can you nuke an entire ecosystem, get extradited for it, and then possibly walk because Congress changed the rules mid-trial. Now, to be fair, the Genius Act was never written to help Do Kwon. It's aimed at regulating real stablecoins like USDC, not algorithmic disasters like UST. But hey, when you're drowning in felony charges, any lifeboat will do, even if it's labeled Genius in all caps. Now, the bottom line here is this case proves what we've all already known, is that the US still has no idea how to regulate crypto. But hey, at least they're finally trying, right? And for Bitcoin, the asset that isn't backed by vibes and wishful thinking, that is a step in the right direction. The lunatics, they may be fading, but clarity, my friends, is almost always going to be bullish. In other news, Canaan, one of the largest producers of Bitcoin mining ASICs, has officially ghosted its AI chip business, and they're moving production to the good old US of A, because apparently tariffs, trade wars, and national security audits are bad for business. They've completed a pilot production run in the US, modeled after their Malaysia-based operations. CEO Nangang Zhang says this is all about sharpening focus and doubling down on Bitcoin infrastructure. They admit that US production costs are definitely higher, but they still see it as a hedge against tariffs and a long-term strategic move. Producing closer to the North American market helps them improve delivery cycles and navigate regulatory hurdles. Now, Canaan's shift follows similar moves by Bitmain and MicroBT, who are also relocating production here to the United States. The company says it's working to optimize its U.S. cost structure and limit production expenses. Right now, ASICs made in Malaysia are hit with a 10% tariff. And tariff on components, still a bit of a murky mess, which makes planning and pricing an absolute nightmare. Canaan says future U.S. production will depend on demand, cost efficiency, and clarity around trade policy. Now, in a statement, Canaan said, quote, "Should we expand our U.S. production further, we intend to ensure that our operations align with evolving U.S. standards for technology and security." Now, this comes after thousands of Bitmain ASICs were seized by U.S. Customs last year over concerns tied to Chinese chip maker Xiamen Svaco and Huawei. Now, these devices were only recently released, mind you. So, yeah, Canaan would rather manufacture where the machines don't get locked up for months. As for Bitcoin, shifting mining hardware production to the United States reduces geopolitical risk. It diversifies supply chains, and it strengthens the network's decentralization. All good signs for Bitcoin's long-term health and its price. So, gotta like that. And here's a headline I did not have on my 2025 bingo card. AI-powered edtech company plans to fund Bitcoin buys using lawsuit winnings. Sounds like an Onion article if I've ever heard it. But that's exactly what the Genius Group, yes, that is their real name, not affiliated with the Genius Act, that is what the Genius Group announced this week. In a press release that can only be described as equal parts hopeful and completely unhinged, the company said it plans to split potential billion-dollar court winnings between shareholders and its Bitcoin treasury. The split on the table here? 50-50. Half goes to shareholders as a special dividend. The other half gets converted into 5,000 Bitcoin at today's current prices, or roughly about $535 million worth of Orange coin. So if all of this works out, investors get cash, and Genius gets to LARP as MicroStrategy. But let's talk lawsuits here for a second, okay? They filed one massive RICO suit against LZGI International, seeking $750 million in damages for, that's right, racketeering. Because apparently this AI edtech firm is living in an episode of The Sopranos Corporate Edition. Now, there's also a second lawsuit coming soon, which CEO Roger Hamilton says could push total damages to over $1 billion. And according to him, the lawsuit aims to recover funds wrongfully taken from shareholders, which is kind of a nice way of saying someone messed with their money and now we're angry, but we're also buying Bitcoin. Now, if they win both cases, the company estimates a payout of $7 per share. And in what is probably the most crypto sentence ever written in a press release, they'll then go shopping for 5,000 Bitcoin like it's Black Friday on the blockchain. But, and this is a very big but, there is no guarantee they'll win anything, which, legally speaking, is the corporate version of crossing your fingers behind your back. This move follows Genius Group's recent spree of Bitcoin buys, as earlier this month they expanded their own BTC treasury by over 50%, with plans to eventually hold 1,000 Bitcoin outright. That's quite the pivot for a company that was, until recently, banned from raising funds to buy Bitcoin in the first place. and that ban has since been lifted, and apparently now it's all systems go on the sue and stack strategy. Look, we've seen a lot of weird stuff happen in crypto before, but a publicly traded company funding its Bitcoin buys by suing for racketeering damages? That's not a treasury strategy, gang. That is a Netflix pitch. Still, if it works, that's 5,000 more coins off the market, and at the rate of corporate accumulation is currently going, there may not be many left for the rest of us. So, yeah, this is pretty wild, but if the Genius Group's lawyers are half as good as their press team, it might actually be bullish. Because at this point, even lawsuits seem to be bullish for Bitcoin. And US stock futures just did something very, very unusual. They actually agreed on something. The S&P 500 futures broke into all-time high territory, topping over 6,100 points and officially brushing off February's peak like it was dirt off of their shoulder. Meanwhile, the NASDAQ composite hit over 20,180, which sounds less like a stock index and more like a Tesla firmware update. Now, you might be asking, why does this even matter for Bitcoin? Well, because when TradFi risk appetite goes up, Bitcoin doesn't want to miss the party. And according to analysts, this equities rally, driven by cooling geopolitical tensions and rising hopes of a Fed rate cut this July, is opening the door for Bitcoin to step up and possibly break out of its recent resistance rut. LVRG Research says the combo of easing trade tensions, Fed whispers, and a general return of bullish vibes is making investors hungry for risk, and Bitcoin might be next on the menu. They think if the Fed follows through with that sweet, sweet rate cut, Bitcoin could blow past its $109,000 resistance and enter what he called price discovery, which is analyst speak for we don't know how high it'll go, but we're pretty sure that you'll tweet about it. Meanwhile, Jeff Mai at BTC says that the stars are aligning for a run at the 112,000 all-time high, especially since the Iran-Israel ceasefire is holding up, and the world, for once, isn't totally on fire. Even Arthur Hayes, BitMEX founder and resident crypto oracle, chimed in on X, saying that all-time highs are coming. He cited the Genius Act, Middle East de-escalation, and probably some numerology we haven't figured out yet. So naturally, everything is pointing up, except, of course, Bitcoin itself. Because despite all of the bullish talk, BTC has smacked into the $108,000 resistance 3 times this week, like a bird hitting a window. It's currently hovering around 107,000, currently looking like it wants to go full rocket ship, but someone forgot to unlock the launch pad. Now, Marcus Thielen at 10x Research says there's a notable dovish shift at the Fed, but traders selling covered calls are keeping the price action as limp as a Fed press conference. And just to spice things up a little bit, the Personal Consumption Expenditures Report, or PCE, that drops today. And that's the Fed's favorite inflation metric out there. It could move markets, or at least give CNBC something to scream about. But the bottom line here is that stocks are running, the Fed's mood is softening, and Bitcoin is pacing back and forth at the door of its all-time high like it forgot its keys. But when it finally breaks through, we're not talking slow climb here. We're talking face-melting vertical candles. But until then, we wait and we stack. And according to new data from Bybit, Bitcoin has officially become the dominant species in crypto portfolios. As of May, it makes up nearly 31% of all investor holdings. That's up from over 25% just last November, meaning it's slowly gobbling up the altcoin aisle like it's a bear market buffet. And while Bitcoin gains weight, Ethereum seems to be on a bit of a juice cleanse. The ETH to BTC ratio dropped to 0.15 in April, its lowest point in 2025, before staging a modest comeback to 0.27. But to put it differently, for every dollar of ETH, investors now hold $4 in Bitcoin, because one is a decentralized hard asset and the other is Ethereum. Now, driving this shift is the new US regs that don't completely suck and the arrival of spot Bitcoin ETFs that let boomers ape in without making a Coinbase account. Now, since Donald Trump retook the office, Bitcoin has outperformed stocks, treasuries, gold, and your financial advisor's smug little smile. Corporate adoption has nearly doubled since June 5th, with 244 companies now holding Bitcoin on their balance sheets. Let's take a look at the top holders on my favorite website in the whole world, bitcointreasuries.net. Are we bringing that up, guys? Here it is. Okay. So again, this is the #1 place on the internet where you can check out what all of the biggest publicly traded companies are doing when it comes to stacking Bitcoin on their balance sheets, right? So let's take a look here. Let's say, for instance, I wanted to see what Metaplanet is up to currently. It looks like they've just passed Tesla on the list here. So Metaplanet's at #9. So if we click on Metaplanet really quick, we'll get a little bit more information as to what their Bitcoin holdings are currently looking like. So right now, they've got 12,345 Bitcoin on their balance books at an average price of just over 96,000 for a profit loss, unrealized of course, currently around 11%. So they're firmly in the green right now. And if you scroll down a little bit, you'll even get some more information as to how this pertains to their share price, what their overall market cap is, and even what percentage of their market cap is made up of their Bitcoin holdings. So, and they even have these graphs here. You can check out their progress over time. A lot of little interesting things you can do here. So make sure to take a peek at bitcointreasuries.net, #1 place on the interwebs, to check out what your favorite public companies are doing when it comes to stacking Bitcoin on their balance sheets. Now, let's go back to here. Collectively, public firms right now hold over 834,000 BTC. And if you add in spot ETFs, that's like 1.39 million Bitcoin, or over 10% of the total supply locked up in things that don't even involve private keys. Now, Joe Burnett from Unchained says that this trajectory could send Bitcoin to $1.8 million per coin by 2035, at which point the only thing left for gold to do is sit in a corner and cry because it's getting replaced. But now the question is, how is retail doing here? And the answer is terribly. Their Bitcoin allocation has dropped 37% since just November, which is down about 11.6%, because instead of stacking sats, they're out here chasing XRP and stablecoins like it's 2017 with a concussion. Now, XRP's portfolio share has doubled, while Solana's has dropped faster than a validator on vacation. The institutions are rotating from Solana to XRP now because apparently we live in a universe where a Ripple ETF has more heat than Solana. Anyway, what's the lesson here, right? Well, institutions, they're buying Bitcoin. Retail seems to be buying a little bit of regret. We're taking a break, but when we're back, we got more stories and we will be joined by Preston Pysh, so stay tuned. All that and much more on this morning's episode of the Blockchain Report. We'll be right back. All right, welcome back to this morning's Bull Run, and we got a real treat for you on this Friday morning because we have a guest that isn't just another finance guy with a podcast mic and a Bitcoin tank. He's a former attack helicopter pilot, a West Point grad, a Hopkins MBA, and a co-founder of the Investors Podcast, one of the most respected financial shows in the game. He's built a global audience by doing what few can, and that's making complex financial systems make sense and making Bitcoin sound like common sense. He's written best-selling books, managed defense programs for the U.S. government, and now leads investments at Ego Death Capital, backing the infrastructure that will shape the Bitcoin native world of tomorrow. If you've ever watched a Buffett Books video, listened to the Investor Podcast, or fallen down a macro rabbit hole and somehow enjoyed it, you probably have this man to thank. He's a builder, a communicator, and one of the sharpest minds in Bitcoin today. Please give a big Blockchain Report welcome to Preston freaking Pysh, everybody. Preston, oh my God, the crowd is thrilled to have you here. How are you this morning?
How are you doing, Hank? You guys know how to make it fun. I'll give you that.
You know, you're a man deserving of that intro, so we're just super excited to have you here. How are you on this Friday? I hope the week has been treating you well.
It's been treating me well. I'm on the road, so if my audio is not the best, I apologize in advance. But excited to be here, and obviously excited to talk about Bitcoin. Always excited to talk about Bitcoin.
Always, and your audio sounds just great. So Before we dive into more Bitcoin news, and I can't wait to get your takes on some of these things, I want to give our audience out there some context, because your background isn't just impressive, it's pretty freaking unique for this space. I mean, from flying attack helicopters to managing defense programs to building one of the most influential finance podcasts out there. Can you give us the quick version of how you got here and what pulled you so strongly into Bitcoin?
For me, I was in the military, right? I graduated from high school. I go off to a service academy, and I find myself in the Army. And when I was at the service academy, you get introduced to all these different branches of service, and I just really did not like walking around in the woods with a really heavy, sack and all the equipment and stuff. So I was like, I think I'm going to fly. I saw the helicopters going overhead, and I was like, that looks a lot easier. It looks like they have air conditioning in there. So I think I want to do that. And that was the initial incentive. But being in the military, I learned really quick that we were always in a war. And I just couldn't really understand the why behind that. Like, here I am in Afghanistan or wherever, and I'm just asking myself, why is the United States always in a war? Why do we have to be policing all of these things? And with enough time, I figured out, well, it's because we have to reinforce the dollar network effect with force and violence. And it quickly pointed me to why is that? Like, how does money work? All of these types of questions that so many Bitcoiners, are asking themselves and thinking about very deeply. And in 2015, it dawned on me that the money was very broke, and there needs to be a solution to that. And lo and behold, Bitcoin comes into your life and changes it pretty drastically. So, yeah, that's the short version, I guess.
I love it. We're going to talk more about that in a little bit, but we got some stories that I am just itching to chat about with you. You ready to go?
Yeah, let's do it.
All right, rock and roll. Hang 10 for a sec. We're going to pop you right back. We're just going to read this story, and then we're going to go over it together. All right?
All right, let's do it.
Okay. Rock and roll. So first, Wall Street. Well, they're not waiting for the Fed to send a memo. They're shoving dollars into Bitcoin ETFs like it's the last asset on earth that isn't melting. As over $1 billion flowed into Bitcoin ETFs this week. That's 9,722 BTC in net inflows in just 3 days. And it happened while the US dollar hit its lowest level since April of 2022. This, my friends, is not a coincidence, as traders are now betting heavily on the Fed rate cuts by September, and Trump's rumored plan to replace Jerome Powell as Fed chair has sent even more tremors through the bond market. The U.S. dollar index dropped over 1.2% after the Wall Street Journal reported that Trump might axe Powell early. And suddenly, everyone's portfolios started screaming, "Get me something that's not printed by the Fed." Bitcoin's price jumped over 2% at the time to about 108K, while ETF holdings surged past 1.234 million BTC. Institutional risk appetite is back, and it's got laser eyes, my friends. Analysts say the dollar is at a do-or-die support level. If it drops below 97.5, we're headed for structural free-for-all territory, which for Bitcoin is like throwing gasoline on a halving cycle. Analysts at Link Energy said if the dollar cracks here, it could trigger massive shifts in flows toward commodities, gold, and yes, Bitcoin. Add an expanding M2 supply, a dovish Fed pivot, and a looming Powell exit, and Bitcoin might not even need ETF inflows to run to 150K, but it's getting them anyway. As Lark Davis put it in classic X post-glory, Wall Street is about to suck up BTC off the market like a effing vacuum. And when the billion-dollar vacuums meet a finite supply of 21 million coins, that's not a bullish signal. That, my friends, is a bull stampede. All right, Preston, we're bringing you back. Wall Street just vacuumed up nearly 10,000 Bitcoin in 3 days. Is this a sign that Bitcoin has officially been absorbed into the TradFi bloodstream? What do you think?
I mean, how do you even follow that? How do you even follow that narration? This is really exciting stuff. I think for people that are maybe looking at it from the outside in, they're looking at just how can the flows be this substantial and the price somewhat feels like it's still going sideways for the last couple of months. And I would just I would caution people to just be patient. Like we are this cycle is very different than cycles I've experienced in the past decade. It seems that with Wall Street kind of coming on the scene and you got fast money really supporting through derivatives and everything else, that you're really kind of extracting a lot of that volatility out that used to be there. And that volatility was really kind of what sucked in more and more speculators, which gave you these like really aggressive run-ups that we've seen in historic cycles. And it seems like that's maybe not going to be the case on this particular cycle. When I look at, like, you brought up the M2 growth rate, the global M2 growth rate seems to suggest that there's a lot more liquidity coming into the market. I think that that's potentially a tailwind, like you described. Clearly, the pace at which Wall Street's buying these ETFs is something that I don't think anybody anticipated over a year ago, and that's extremely bullish. All the Bitcoin treasury companies that are coming on the scene that are effectively just taking all of this fast fiat printing and transmuting it into very hard money onto the balance sheet is the equivalent of just going and loading potential energy into a corporate veil. And because it's so potent and so powerful, they're going to be able to, potentially transmute all of that into a real operational business long term. But in the short term, as long as they're making 50% annualized in Bitcoin, they don't have much of an incentive to pivot into operational businesses that much. That's another consideration and another theme that I think nobody was expecting in this current cycle. So I'm with you. I'm very bullish. I don't see anything to be particularly bearish with where we're at right now. The macro, global macro setup could maybe cause some impairments, things that we're not thinking about. If the war could really spin out of control or something like that, that's always on the horizon and always something that can, suck a lot of liquidity out of the markets. But for the time being, it seems like all systems go.
Yeah, and you mentioned this cycle doesn't feel like one you've seen before. What do you think is the primary catalyst for that? Is it the institutional adoption that we saw or we're seeing now in mass, kind of led by MicroStrategy back a couple years ago? Or do you feel like it's more of the government guardrails we're seeing put in place? Which one do you think is having the biggest impact right now? Or maybe it is just a combination of both at the right time, or what do you think?
I think it's both. And I think that, you've attracted now that Wall Street can play in this space, what you're doing is you're attracting a significant amount of fast money. And the fast money is not looking at Bitcoin as a long-term holding position. They're looking at it as, wow, there's a lot of volatility. I want to go long and short and I want to capture the spread. And so what that does is it kind of anchors and it's kind of controlling that volatility. And with time, it's just going to continue to move out in the direction that it's intending to move out on the spot. But what you're seeing is that collapse in the volatility because you have people that are bottling that volatility up and putting it into the market at yield for people that don't want to participate in necessarily the upside. They just want to participate in the yield that can be sucked off of that volatility. And so because you have that coming into the market in mass quantity, like it's never been done before in any of the previous cycles. You just didn't have access to this sheer amount of capital, and you didn't have this level of sophistication being built around it either. That's why I think it's different.
And you talked about the volatility. I feel like the volatility this most recent cycle has actually seemingly been a lot less than we've experienced previously, especially when you compare it to like TradFi. Do you feel at all that like with the dollar seemingly tanking and ETF inflows surging, are we watching kind of a slow motion rug pull of fiat confidence and people are now starting to like the dots are starting to connect and like, hey, there's a better alternative and a lot of big institutions are looking at Bitcoin?
Yeah, I think that's some of it. If I was going to describe mechanically what's happening, I think strategy is a great example. You have Michael Saylor that's going out there and he's offering all these preferred and he's offering all this convertible debt. And what he's really doing is he's selling a product that's extremely desirable to the market, and he's providing a higher yield than they can get anywhere else at less risk. And that's the thing that I think is really hard for people to wrap their head around, because they see how much he's buying on a weekly basis, and they're just immediately thinking, oh my God, this guy is going to leverage himself into oblivion. But what they fail to realize is the issuance that he either has to pay out in cumulative preferred dividends or in the coupons of the convertible debt, what he has to pay out is like a pittance compared to how much Bitcoin he has on the balance sheet to cover it all. And I would say it's like 4 to 1, 5 to 1 of how much more Bitcoin he has. So he can weather extreme volatility in the Bitcoin price while issuing these types of fixed income instruments. And what he's really doing, and this is the core point that gets to your question, is he's catering to a buyer and a person who doesn't want Bitcoin's crazy volatility. And they're saying, I don't have to participate in all this upside, this 50% upside that we've seen historically. I just want a 12% or a 10% return, right? That's all I want, with a tiny bit of upside, which would be the convertibility of it. And so what Michael's doing is he's giving that to the market, and then he's taking all of that additional upside that's there, and he's giving it to the common shareholders, right? And that's the thing that I think people are missing is, and so why could the common shareholder get more performance than Bitcoin? It's because he's literally extracting it out of the fixed income market who doesn't want it, and he's giving it to the common shareholder. And so there's this transmutation that's happening. And I think it's totally missed on most market participants. I think they just like casually observe it and they look at it and they're saying, this guy's crazy. Like, what he's doing doesn't make any sense. And if you're only spending like 10 minutes observing it and thinking about it, and maybe you don't have a background in security analysis, so you're probably not going to get it anyway, even if you did spend a bunch of time trying to understand it. But he's demonstrated that, and now you have copycats and other people that are coming out and doing the same thing, and the market just continues to gobble it up, because if somebody actually understands it, the money's in the bank. He doesn't have to go out and earn it operationally. The money's already there. It's already good for the issuance of all this fixed income. And because of all this is why I think you're seeing some of the volatility being stripped out of what we've seen in previous cycles.
Mm-hmm. Do you feel like at all we're seeing all these copycats, like you mentioned, who are doing the strategy Bitcoin treasury play? We're seeing this massive inflow to ETFs. How much of this do you feel like is just people positioning themselves ahead of a potential and rumored Fed pivot that we're kind of hearing about? And how much do you think is a genuine long-term macro thesis on Bitcoin itself?
So what I would say is anybody who's buying ETF is long and doesn't care about that volatility, right? Now, they might be, retail speculators, people that maybe don't really understand it. They're going in and out. But in general, I would characterize that as somebody who's comfortable holding the spot price action. And they're probably, most likely buying it to offset the sheer mathematics that they're looking at from a fiscal standpoint. So a lot of people can go out there and do the math, and a lot of people are suggesting that we're in a debt spiral here in all developed major economies. And because of that, they want some type of hedge that if we are in fact in a debt spiral, that hard money that can't be debased by any government would protect them from that. I think that's very well understood for the most part. Now, whether people have 4-year conviction, 10-year conviction, or 6-minute conviction, that's a whole different question. I would suggest most probably don't have much more than like a 6-month conviction. But I think with time, you're going to have more and more people that actually get more convicted because they actually understand what it is that they own.
Yeah, I mean, I think it's natural as the track record for Bitcoin continues, and we're seeing that volatility, maybe even a little bit of that so-called uncoupling or decoupling that we've been waiting for. It does seem like things are a little bit more stable than they had been. I would expect, more inflows going forward. But I think a question on my mind, and I think a lot of others too, is we've been getting so many bullish narratives as of late for Bitcoin, right? Finally getting government guardrails in place. We're having all these treasury companies putting Bitcoin, saying we're actively putting Bitcoin on our balance books, and more seem to be popping up every day. Why do you think the price is where it's at right now? With all of this news, I would have expected much higher Bitcoin prices, but right now we're kind of struggling to meet the most recent all-time highs, which I think a lot of people expected this time period to be the hottest part of the cycle.
Yeah, I would agree with that. I think, and maybe it's because I'm just super optimistic on the price, but something that I've kind of learned through the years too is just a lot of people don't own Bitcoin and like that's the only thing in their portfolio. And so let's say somebody has a 5% position or a 10% position in Bitcoin and they own all these other things and all these other things are getting impaired. What do you have to do with your Bitcoin position, which is holding its ground or going up, is you have to sell that to offset the impairment in some of the other parts of your book. And so, I think for hardcore Bitcoiners that are like fully exposed and have 100% of their net worth in Bitcoin, they're looking at it and they're saying, this doesn't make any sense. But for the person who's using it much more as a hedge, or, they have a 2% position or a 5% position, they might be able to more eloquently kind of describe to the maxi as to why they're selling, which is to offset, troubles in other areas of their portfolio or their book.
That's a great point. I never really thought about that because we really haven't seen the quote unquote alt season that I think a lot of people are maybe anticipating at this point. And it seems like a lot of those alts haven't moved in tandem with Bitcoin rising the way we've seen in years past, right? Last time Bitcoin was at all-time highs, Ethereum, I think, was up around like $4,500-ish. And right now it's struggling to maintain $2,500. So this has just seemingly been a very unique landscape in terms of the cycle of Bitcoin that we've seen previously and how those altcoins react in tandem with the rise of Bitcoin's price, which just hasn't been what we've seen in the past. So it's interesting times right now for sure. We have a story on Metaplanet that I cannot wait to get your take on. So hang tight, Preston. We're going to be back with you in just a second, because Metaplanet, Japan's Bitcoin chugging corporate juggernaut, has recently picked up an additional 1,234 more Bitcoin, bringing its total holdings to a numerically satisfying 12,345 coins. Sometimes I think they're just trolling us with these buy numbers. Now, the company dropped 19.27 billion yen, which is about 132.7 million bucks at an average price of 15.6 million yen per coin, and they're not stopping anytime soon. Their new plan, dubbed the 555 million plan, aims to acquire 210,000 BTC by 2027, which just happens to be 1% of Bitcoin's total supply from one company in Japan. They're already up over 315% year to date on their Bitcoin yield metric. And the funding strategy, we're talking bond issuances, equity plays, and smart capital allocation. This isn't Dogecoin on a balance sheet. This is a multinational building an institutional war chest out of digital scarcity. Metaplanet even retired multiple bond series early by using gains from stock warrants, or in other words, they're playing corporate finance chess while the rest of the market plays Candy Crush on leverage. Now, with over 654.7 million common shares issued and rising Bitcoin prices per share metrics, they're setting the gold standard for what a Bitcoin-first public company actually looks like. If they hit their 210 coin target, they'll have more Bitcoin than most countries. And yes, my friends, that's very bullish, because in a world of melting fiat, corporate accumulation is a long-term price floor addressed as a press release. Preston, we're bringing you back. Metaplanet is going full-on Michael Saylor in a kimono. How significant is it that a Japanese firm is now leading the corporate accumulation race?
Well, if I was a Coinbase shareholder, and I was looking at the treasury of Bitcoin that I've accumulated over more than a decade by being in business, and I'm looking at this small one hotel is the operating company of Metaplanet, and now they have a bigger treasury than Coinbase. I would be extremely upset if I was a shareholder of Coinbase. Like, this is embarrassing. Like, they're mopping the floor with the CFO of that company, and just anybody who's looking at this from the outside is saying, what in the world is this company doing? I forget what they IPO'd at, but it was probably close to $100 million, $100 billion. Like, it is nuts. Mm-hmm. So what they're doing is they're putting on a clinic, and I have to say that the that the regulatory setup in Japan is making this extra conducive for them to put on a clinic. But for anybody that's looking at this from the outside in, when you have a company that's trading at 4.6 to 5 times the NAV, you're able to do crazy creative things with respect to how much Bitcoin you can accumulate in this setup. And so as long as they continue to trade it at that kind of premium of the MNAV on the company, like they're going to continue to run the table of accumulating Bitcoin onto the balance sheet, because when you do that, you're buying it for an 80% discount effectively compared to anybody else. And when you're buying at an 80% discount, guess what? You can go out there and you can securitize more fixed income against that massive treasury that's sitting there on your balance sheet. And then it's just this reciprocal engine that continues to run. And as long as they don't change the regulatory treatment of Bitcoin over in Japan, these guys are going to continue to clean house. So, if you're a company with, billion-dollar operations and you're in Bitcoin and you're not trying to learn from a company like this, you need to really wake up is my guidance.
Yeah, no, I think you're right on that. And I think we are starting to see that slowly but surely from a lot of other companies as they're stacking it on their balance sheets, but not quite at the rate of Metaplanet. They have been quite persistent so far. But I know Michael Saylor's like, respect, guys. I like your play. In fact, Metaplanet's 555 million. Go ahead.
If I was Michael, I'd be really jealous just of the sheer size. I mean, this is like, he's steering a big ship, and these guys are, steering a sports car because it's smaller. They're just more agile. They have a regulatory setup that everybody wants to own this because the treatment for them to hold like raw, spot Bitcoin is very disadvantageous to them. And I mean, they are in a very unique position to continue to run the table at a pace that makes anybody in the world jealous. Like, it is crazy. I know I'm jealous.
It is crazy. I think we all are. They've got a nice bag going right now, and they have plans to get 210,000 Bitcoin in the next 2 years, which would be 1% of the total supply. Do you feel like this is just headline math, or are they actually setting a precedent for balance sheet optimization in a fiat endgame type scenario? I mean, this is wild what they're doing.
Yeah, I don't think that they're throwing out numbers to just create marketing. I think that they're truly going after these numbers. And I think when you look at the rate at which they've been able to go at it, it's justified. And again, the premium over the MNAV is what's really kind of allowing this to take place. If they were at a 1.5, kind of like where Strategy's at, they couldn't run the table like they're running the table. But up in these areas where they're at, as long as they can kind of hold that in place, which is super speculative, I have no idea whether they can continue to run an MNAV that high. But if they do, watch out. They're gonna be moving faster than anybody on the planet.
Yeah, but I got to say, they do seem to have fun with the numbers. I think their previous holding total was 11111, and then their most recent purchase was 12345 or whatever. So it seems to be like Yarovich at least has a sense of humor about him as he's funding all of this through bond issuances and warrant plays. Do you feel like this is setting the stage for the future of corporate, capital strategy in a Bitcoinized world using these, methods to acquire more BTC on your balance books?
Two things. Yes, it is, but I would say in the short term, I think you see this really play out in the coming 10 years. After that, everybody's going to probably be thinking in Bitcoin terms anyway, because it's going to become that obvious within 10 years. So in the short term, though, in the coming 4 to 5 years, you have this gold rush of how can I put as much of this stuff on the balance sheet as possible by taking advantage of how broke fixed income markets are and the yields associated with fixed income markets, and just levering the fact that Bitcoin is very early and is going to continue to appreciate and have a huge network effect. The point that you're making on the really unique numbers, one of the things that's really advantageous to these companies that are doing this is the more speculators that come into the market, the more advantageous it is for the management in order to run this strategy. So by them doing things that are quote unquote memeable, I think is very advantageous to attract more and more speculators into the market, which allows them to, take advantage of that MNAV and, do really fun and creative things.
Yeah, no, I agree. It seems kind of typical too for this arena, right? Like since it's kind of birth, it seems like crypto and Bitcoin has kind of had this kind of fun playfulness to it. And I feel like they're kind of utilizing that to help get some more headlines and doing it masterfully. As I talk about Metaplanet almost every freaking day. So kudos to them. Let's say Metaplanet hits their 210 Bitcoin goal by 2027. What do you think that does to price discovery? And what does that do to the competitive pressure on other global firms trying to acquire Bitcoin going forward? Is this just, I feel like we are early. This is just the beginning of this happening, right?
It's just really unfair.
It's just really.
That's all. It's really unfair because they're going to accumulate so much Bitcoin, and at the end of the day, we're not making any more of it, and more people are going to figure this out, and more people are going to realize that if they're not denominating everything in terms of Bitcoin, they're not conducting sound economic calculation as to what the value of anything is, and we're not even to the point where equity is being revalued in Bitcoin terms, or at least 99.9% of the world isn't. But for those, one or the 10th of a percent that's out there that is doing this, they realize that you have to try to attract as much of this onto your balance sheet as possible, and then you can figure out which operational businesses at very good prices you should acquire next, which is, I think at the earliest 5 years out, and probably more likely at the 7 to 10 year mark out. Because think about it, if Bitcoin's growing at 50% annualized, 40 to 50% annualized, and you could go out and buy a company at 5 times earnings, 5 times earnings means you're buying the company at a 20% return, which is half the performance of Bitcoin, right? And this is all like pre-tax numbers. So getting a company at 5 times earnings that actually has a sustainable competitive moat and has risk associated with it, that's not even a hard decision. This is a brainless decision that you wouldn't make today, unless you're doing it as like a small engine inside of like a treasury company or something like that. Then it makes sense. But for the most part, you would not do your entire business you wouldn't buy a $100 million business at 5 times earnings if that was the whole market cap of the company and Bitcoin wasn't involved, just because of the numbers.
Yeah, no, you're totally right. And Metaplanet seems to get it, but on the other side of the coin, there are some people out there that still aren't seemingly getting it. And I want to talk about that in just a sec with you, because across the pond, one of the UK's biggest banks is trying its best to pretend it's 2017, as starting June 27th, which I think is today, Barclays is banning crypto purchases using Barclays credit cards, citing concerns over volatility and consumer protection. The bank claims that crypto users might rack up debt they can't repay, which is adorable coming from a legacy institution that helped invent the 2008 financial crisis. They also warn that crypto doesn't come with protections from the Financial Ombudsman Service, and neither, it turns out, does being a Barclays customer. This move lands right as the FCA, the UK's main regulator, is proposing to lift the ban on crypto ETNs for retail traders. So while regulators are trying to play catch-up, Barclays is over here cosplaying as the risk aversion fairy. Their message: we trust you to buy concert tickets, overpriced coffee, and NFTs of apes, but not Bitcoin. Meanwhile, here in the US, Trump's back in office and regulators are dialing down the heat. Stablecoin legislation is advancing, and even the SEC seems to be on the no enforcement vacation. In Hong Kong, regulators are actively promoting digital assets, and yet Barclays, a bank so British it probably cancels your account for liking crypto memes, wants to save you from your own decisions. Maybe they're protecting consumers, or maybe they're just salty they didn't buy at 10K. Either way, this is a bearish move for innovation in the UK, but ironically, probably bullish for Bitcoin, because it reminds everyone why banks are the very thing Bitcoin was created to replace. If they hit their 210K target, they'll have more Bitcoin than most countries, and I think we're talking about the old story. Okay, so Preston, we're bringing you back. Barclays is banning credit card crypto buys, and it feels like a time warp back to 2018. I don't miss it then. What's your read on the real motive here? Why would they do this?
I mean, at the end of the day, you have legacy institutions that are getting this. You have some that are not getting it at all. And Barclays is a UK bank, like you said, and they just seem to be maybe a little bit behind the power curve. And in life, there's some that figure it out quick, and there's others that battle and fight the change. And you know what? If you're going to be successful in life at anything, whether you're leading a company, leading a nation, or leading yourself, the people who do the best are the ones that are most adaptable to their environment and change. And, we've seen Vanguard, perfect example of another bank that is battling this. They don't like the change. They think that it's scary, but you got to lean into change. You got to be, you got to do the deep research. And, I can't speak to what the leadership at Barclays is understanding or not understanding, but your comment about buying concert tickets versus Bitcoin is very salient.
Yeah, and I think you're right. I mean, we see it time and again, even with the biggest Bitcoin maxis, aka Michael Saylor, people that didn't buy into the whole Bitcoin thing, and then they did their necessary research, and then their tune tends to change quite a bit. It seems like we're kind of waiting for like Warren Buffett to get on that train. I don't think it's going to ever happen. I think he's just a little too old school to get in on this at this point. He's been a pretty staunch detractor of the Bitcoin space for a while, and it sounds like Barclays is still kind of playing from that same playbook until they eventually read a white paper and kind of learn what the rest of us have learned in our own time and through our own Bitcoin journey. So, I think you're right, and I think like most of these people, we'll probably see their tune change soon enough. It does beg the question, though. Does this kind of gatekeeping, ironically, accelerate Bitcoin adoption by reminding people why decentralization matters?
Yeah, I think so. I think that, it definitely reminds people. Like it's a talking point. The one thing I've learned through the years is anytime, whether it's pro or negative, it's just free marketing. Like it's just another talking point that I remember with the Vanguard thing. I mean, the amount of memes and the amount of people talking about how Vanguard passed on this was just so much marketing and so much attention to Bitcoin that, if you were going to pay for something like that to run it on the national news and all the syndicate on social media, could you imagine what something like that would cost? And so everything, it's so anti-fragile from a marketing branding standpoint that when a company does this, like they're just making the network more powerful.
Yeah, you're right. And it kind of makes me wonder, like, in your view, they're making the network more powerful. We're getting this free promotion unintentionally because they're against it, but everybody keeps hearing the word and the name Bitcoin. We're getting those touch points. Do you feel like legacy banks like Barclays are increasingly like exposing themselves as incompatible with a Bitcoin native financial future when they come out with things like this?
I'd say that again. I'm sorry, I missed the question.
Do you feel like institutions like legacy banks are exposing themselves as like being incompatible in this Bitcoin native financial future that we're seeing when things like this happen? When Barclays comes out and says we're rejecting it entirely, like is it making it clear that banks are kind of going the way of the dinosaurs in some respect?
Well, some are and some aren't. Like Cohen and Cantor Fitzgerald and there's some out there that are really kind of understanding this, and then there's others that are just totally lost. And I think it's just it's just a representation of the individual. Like there's some people out there that just really get this, and there's other people that are completely clueless. You have the same thing at the corporate level. You have the same thing at the bank level. You have the same thing at a nation state level. There's countries out there that are very trying to prevent it in every way that they're fighting it every way they can. I mean, the United States was that in the last administration. And now with the new administration, you have the polar opposite. So I would just say it's a function of the leadership within the organizations, and it's part of human nature.
Yeah, I think that's a good point. Like in any disruptive technology, even the internet when it first came out, there were people that were detractors that didn't think it was going anywhere, and here we are, 30 years later, and it's everything. So it seems like we're kind of experiencing a similar adoption cycle. I actually saw an interesting graph the other day, and it was showing that right now, in terms of Bitcoin adoption, we are at the exact same point that the internet was in 1999. So if anyone's still asking, it seems like we are still quite early, which is great. We got one more story, and then we're gonna get a couple questions about you. Sound good?
Sounds good. Let's do it.
Sounds good. All right, next up, Philip Lafont, hedge fund billionaire, Coatue Management founder, and apparent recovering Bitcoin skeptic, has added Bitcoin to his Fantastic 40 list of top investment bets for the next 5 years, right alongside Microsoft, Nvidia, Amazon, and Meta, but noticeably not Apple or Google. So just let that sink into your pretty little brain for a second. He called Bitcoin a missed opportunity and told CNBC, "I wake up every day at 3 a.m. and think, why am I such an idiot?" I know the feeling, buddy. Now, this is probably the most relatable billionaire quote in history. I mean, I've said it before. Lafont now projects Bitcoin's market cap that it could more than double, hitting $5 trillion by 2030, and that would place it in the same weight class as Microsoft and Nvidia. Not bad for an internet magic coin with no CEO. He cited shrinking volatility as a key reason for his bullish flip and compared Bitcoin's risk profile to the NASDAQ, which for those of you keeping score at home is basically TradFi code for it's less scary now. Lafont also brought up de-dollarization and the decline of the U.S. financial dominance, both tailwinds he believes will propel Bitcoin further. So while most hedge funds are still throwing darts at AI startups and ESG baskets, Coatue's captain is now eyeing Bitcoin like it's the last lifeboat on the Fiat Titanic. And even though he doesn't own any Bitcoin yet, he's talking about it like a man who's building a long position during commercial breaks. Meanwhile, analysts are tripping over themselves with bullish price targets. Bybit's derivatives chief sees 125K by the end of Q2. Scott Melker is calling for 250K by the end of this year. And Semler Scientific, who already owns almost 4,500 Bitcoin and plans to hit 10K before New Year's. So sure, some hedge funds are still skeptical, but that's exactly how every major Bitcoin rally starts. Doubt, denial, capitulation, corporate accumulation, baby. And if that cycle is playing out again, Lafont's 3 a.m. regrets might turn into 3 a.m. market buys, which would be very bullish for your bags. All right, Preston, Philip Lafont calls Bitcoin a missed opportunity and adds it to its Fantastic 40. How do you interpret this TradFi repentance arc?
Well, I think you're just going to continue to see more of them kind of come on board as they figure it out. The interesting thing for me is if you're talking to somebody that's just kind of watching a casual observer, they see the price, they see it at 100,000, and they say, "Well, I clearly missed that boat." And I think that when you see a person like this, a billionaire that comes out and says, "Wow, I totally missed this, and I'm putting it on my top 40 list for the next 5 years." Hopefully people in retail see that and take note and say, well, why is this guy still thinking that there's more room to run? Like, help me understand that, because this imaginary Mario coin's already 100,000. You would think that the thing's done. And it's not. It's just getting started. And that's really difficult for people to hear as they, kind of try to wrap their head around, like, what in the world is this? Like, how in the world is it at 100,000? Like, there's nothing even there. And they're saying that it's going to go to 1 million or whatever. Like, that just doesn't really compute for a lot of people. So, I'm excited that we have more billionaires coming out and talking about it, because I think, whether people like it or not, retail and other people kind of take note when somebody who's has a very high net worth starts talking about something as being desirable. So yeah, just add them to the list, I guess.
Yeah, and you made an interesting point there too. You mentioned people see it's at over 100,000 right now, and people are like, we're late, we missed the boat. But it makes me wonder if maybe, like, as far as like Bitcoin evangelists like you and I go, are people missing the point, which is really it's still a pretty good alpha play, right? People are saying 100,000, oh, I'm late, but if you look at TradFi, right, if I put my money into the S&P or whatever, I'm getting on average 7 to 11% a year. It's going to take about 7 years for that to double. if you look at the history of Bitcoin and how many times it's just doubled, and you play this as an alpha thing, even if you put in 10 grand and only own like 0.1 Bitcoin, the chance of that doubling historically is much higher than pretty much anything else out there, especially with the lower, seemingly feel of lower risk with Bitcoin as we continue to mature as an asset class, right? So it's like people look at these big numbers, but it's like, just look at the alpha play, man. And it seems a lot more, I think would be a lot more palatable to people that haven't got in yet. What do you think?
Yeah, I think so. But you're framing it up from somebody that deeply understands finance, or just kind of understands like the market that we're in. And I think for a lot of people, where they're really focused, the retail people are focused, is just their craft. You know, if you're a doctor, you're focused on saving lives. If you're an accountant, you're in the day to day, just kind of like crunching the numbers for tax purposes for a company or whatever. Or, you name it. People are focused on their day to day craft. And to really deeply understand what's happening here, you have to understand the fiscal situation globally. You've got to understand how legacy currencies work and how they continue to be debased by, call it, anywhere from 8 to 12% annualized. You got to understand how network effects work in adoption cycles of technology. And like when you wrap all these things together, you can see why it's really difficult for very smart people that are focused on operational things in their day-to-day still can't kind of wrap their head around it. And the price action continuing to appreciate is a reminder to that person that, hey, maybe you're missing something. And I think that 100,000 is really kind of that really first number where it's like, how in the world is this imaginary thing, this imaginary unit, worth $100,000? And I think we're going to have, I think the next run up, like call it to 200 or to 300, is going to just further reinforce that for people that are just kind of looking at it from afar. I think you have a lot of smart people that are looking at it now and they're just saying, I think I'm missing something. Like there's something here. This is really strange. It's so weird and unique that it's really capturing their attention. But where it goes next is going to, I think, force people to really do their homework and dig in a lot deeper.
Yeah, and it looks like LaFont finally did his homework as he sees Bitcoin hitting a $5 trillion market cap potentially as soon as 2030. You've talked about this kind of value transfer before. How realistic is that prediction by 2030, you think?
Say the number again. What's he thinking it's going to be in 2030?
He thinks $5 trillion market cap for Bitcoin by 2030.
Yeah, I think that's easily doable. I don't have any reservations thinking that it's going to go there. I mean, if we just look at the compound annual growth rate that we've seen historically, even if you dialed that back up a bunch, you would get there by then.
Yeah. All right. So we're both in agreement. All three of us, we do think $5 trillion market cap for Bitcoin 2030 is on the table. I love to hear it. Preston, I'm going to give us both a quick break. We're going to come back for a few more questions about you and everything you got going on. And we'll have more Blockchain Report after this. Stay tuned. All right, we're back with Preston Pysh. Preston, we had some fun. We talked about the stories of the day, but now I want to shift the focus to you, my friend, because you have had a super interesting career. I mean, helicopter pilot from West Point to now Buffett books. I mean, I got to know, and I think our audience wants to know too, what inspired your shift from military leadership to financial education? Do you just not want to get shot at anymore? I would totally understand that. What was that journey like?
Well, that was definitely one of the aspects. I didn't enjoy that part of the job, but I've always just really enjoyed math, and that's why I did aerospace engineering for my undergrad. And while I was in the military, I took up this love for security analysis and trying to figure out what I think businesses are worth, because it was this mathematical process, and it felt like it was a little bit of a discovery trying to find like hidden value amongst the sea of opportunities that were out there. And through that process, I just, started talking about it online. I started off having a forum, oh my God, a really long time ago, 15 or so years ago. and just talking about different companies that were out there on the public markets that you could own. And through that process, I just slowly morphed over into doing all of this type of stuff. So I would say it was my love for math and just trying to calculate the value of what I thought businesses were that really kind of led me here.
Well, I got to give you your flowers, Preston, because you have a real talent for breaking down truly complex topics. So I got to ask, what's your framework for making something like Bitcoin or macroeconomics accessible to a wide audience? Asking for a friend.
One of the things that I learned very early on in the Army is if I had to explain something to the soldiers that I was leading, they didn't want a dissertation. They didn't want flowery this or that. They just wanted to get straight to the point. Like, tell me what it is I need to do. Don't make it more complicated than it needs to be, and just get to the point. And I think that culture and that kind of environment of being around people that just want you to get to the point and not sugarcoat anything and be able to deliver the truth and all those types of things was that kind of drove me to kind of operate that way, after I left. So I think it's rooted in that. If you're saying something that you're trying to make them impressed with you, like you're trying to show off your knowledge on something or whatever and not making it accessible, they're going to call you out on that immediately. They're like, oh, wow, you made that 20 times more complicated than it needs to be. Like, did you need to stroke your own ego? Like, this is like the kind of things that they would say back to you. So, and I love that environment. Like, I love when people can just like spit truth bombs like that back to you. And I don't know.
Why do you think Bitcoin resonated with you so strongly when you first heard about it? Was there a specific aha or orange pill moment you could tell us about?
I was a firm believer in Ray Dalio's long-term credit cycle before I found Bitcoin. I'd studied Ray and was really fascinated by this idea of this long-term credit cycle. I could see the long-term credit cycle in the 10-year Treasury yields. And I never thought that the 2008 crisis was solved with quantitative easing. I thought that it was actually, it was made worse through some of the policy and the actions that were being done. So I was looking at gold as something that needed to be in the portfolio because of, Ray's thesis and why Ray recommends, at the time he was saying something like 7.5% of your portfolio should always be in gold. And so I understood that. I also understood that the 2008 crisis was a big issue for global markets. And so when Bitcoin came along, it really fit very neatly into this core understanding that I thought I already had of the global macro setup and this long-term credit cycle.
Gotcha. And you mentioned Ray's thesis. You're a general partner at Ego Death Capital. So I would love to know, what's the thesis driving your investments in the Bitcoin's ecosystem right now?
Well, at the heart of it is, if you can't outperform Bitcoin, what are you doing investing, first of all? Because you should just own Bitcoin. And it's a super aggressive hurdle rate. I mean, we're talking 40 to 50% annualized is what you have to be outperforming. And so when I'm looking at where could you outperform that, my opinion is that you have to do it in a industry that's being dematerialized. So you could argue like AI is a space that's dematerializing nearly everything. And then the other thing that I would say is that I think that the world of finance, traditional finance, is being dematerialized by Bitcoin. So I think you have to be in one of these two spaces. And then the question comes down to, now you have to be buying early stage businesses that have a potential to 10x. You have to get them early enough, is effectively what I'm getting at, in order to have the return profile that could compete or outpace Bitcoin. So when I'm looking at that, I'm saying, okay, I think the only place I could be is in the businesses that are going to dematerialize traditional finance, because they have that growth that you could buy in at, $10 to $30 million, and they become $1 billion plus companies in the coming 10 years. But the kicker is if you're investing in these types of companies and they're retaining earnings in Bitcoin because they actually understand what's taking place, that's the additional kicker that really kind of, I think, puts you over that hurdle rate.
Well, it sounds like you kind of have a similar thesis. Didn't I think Pomp came out just yesterday being like, until you can find something that has a better hurdle rate than Bitcoin, like why are you considering investing in anything else? Did you see that? I think he tweeted about it. It was like yesterday or the day before.
I didn't see his announcement, but yeah, these are ideas that I've been literally talking about on my show for nearly a decade. So it's fun to be able to put it into practice with Ego Death Capital.
Yeah, and I know we got to let you go here. It's like I have one final question I would love to ask you. As someone who really understands the landscape and the evolving ecosystem of Bitcoin, how do you respond to people who still call Bitcoin too volatile or just another speculative asset? What do you say to them?
Well, if you're truly understanding where it's going, the volatility makes sense. If you invest in something that goes public that's small, I mean, Amazon's a perfect example. If you go back into the late 90s, early 2000s, it was a crazy volatile company, and it's because it was the market was undecided as to whether it was going to 100 billion plus or it was going to fizzle out and die like all the other internet companies. And so what that volatility is really showing you is the market is aggressively trying to figure out what it's worth. And there's a lot of opinions as to what it's worth. And so the fact that you have so much volatility in something that's a multi-trillion-dollar asset today tells you that there's people out there that say it's either going to zero or it's going to $1 million a coin. And I think that volatility speaks to that type of statement.
Yeah, no, I think that makes a lot of sense. And Preston, it was so fun talking to you today. We didn't even get to cover so much. I mean, your investor podcast, the books you've written, there's so much more to chat about. We're going to have you back another time for a part 2 because you are just a wealth of interesting tidbits and info. So we certainly appreciate having you on the show today. Before we let you go, if people want to learn more about you, your incredible podcast, the Investor Podcast, or any of the other amazing things you're up to, where can we send our audience to learn more?
Yeah, I'm active on X. I'm active on Nostr, just my first and last name, Preston Pysh. You can check out the podcast. It goes by We Study Billionaires. Or if you're interested in the VC side of things, it's Ego Death Capital is where I'm a GP.
Incredible. Well, Preston, again, thank you so much for your time and your insight and everything you brought to the show. You're an absolute pleasure. And we hope to have you again real soon. And thank you so much. And I hope you have a great weekend.
Thank you, sir. You too.
Pleasure is mine. All right, we're taking a quick break, but when we're back, we have more blockchain reports. Blockchain Without Borders is coming up next, so stay tuned. Otherwise, you're not going to know what's happening in other parts of the world. We'll be right back. Sorry, guys. Okay, sorry about that, guys. We're back. It's a little Blockchain Without Borders. There's a big world out there, and yeah, they care about Bitcoin too. And India's ruling party may be taking a page out of the U.S. playbook, and Bhutan's, apparently. Pradeep Bhandari, national spokesperson for the Bharatiya Janata Party, is now urging the government to launch a pilot for a sovereign Bitcoin reserve. He cited the U.S. Strategic Bitcoin Reserve and Bhutan's hydro-powered hodling as evidence that Bitcoin accumulation is a rising geopolitical strategy, not a Reddit thread. Now, according to Bhandari, Bitcoin could serve as a hedge, boost fiscal resilience, and align India with the modern monetary era, which is a fancy way of saying maybe we should buy some before it hits $1 million. He described Bitcoin as digital gold and praised its fixed supply and transparency, and argued that India's booming renewable energy infrastructure makes it an ideal candidate for state-backed mining. He called for clear regulations instead of India's current approach: tax it like it's evil, regulate it like it doesn't exist. Currently, India crypto traders get slammed with a 30% tax and a 1% TDS fee on an industry with no actual legal framework. Imagine getting fined for speeding in a city with no roads. That's kind of what's happening here. Bhandari warned that while India delays, other countries, including BRICS members, are moving pretty fast. And for once, China might be ahead of the curve in a good way. His pitch, a measured Bitcoin strategy, won't be a reckless pivot, it'll be a strategic leap. If India moves forward, we could be looking at another billion-person nation competing for scarce sats. And that's a bullish backdrop if you like your Bitcoin demand curve to be exponential. We're taking a break, but when we're back, we got some breaking news, we're having a market update and more. Stay tuned. More Blockchain Report after this.
Hey Hank, we have some breaking news coming out of the Roxom X account.
We got some breaking news. Let's take a peek here. Just in, Bitcoin Treasury Capital, it's a Swedish company, acquired 81 Bitcoin. They now hold 147 in their reserves. They plan to go public on the Swedish stock market soon with ticker symbol BTC. Oh, they snatched that one up quick. All right, well, this is what we're seeing here, gang. Every day, we're seeing another company, another publicly traded company, or going to be public with their own Bitcoin buy. This is not some happenstance. This, my friends, is a trend, and we're seeing it all the time. Thanks for the breaking news there, Victor. I think we got some more coming up here, too. What else? Okay, can we bring this one up? The Bitcoin on exchanges. This is an interesting one, guys. So, as reported by RoxomTV this morning, Bitcoin balances on exchanges have recently reached an all-time low. So take a look at this chart here. Right now, there's just over 2 million Bitcoin on open exchanges, right? So why is this important? Well, traditionally, when there's less Bitcoin on exchanges, that means people are looking to hodl, baby. They're holding on and not looking to sell their Bitcoin. So the very fact that there's only 2 million on exchanges right now generally means that the sentiment right now is bullish. I mean, we have potentially some Fed rate cuts coming up here in the upcoming weeks and months. So I think everyone's kind of getting ready for that next leg up. So make sure that you are building your own bag of BTC, because when this rocket ship takes off, it's just going to become more expensive to get your own ticket on board. So make sure you're hodling, baby. What else we got this morning? Okay, and also in news, breaking news this morning, we have Australian publicly listed stock surges 47% after a 330K Bitcoin purchase. So, and again, now we have an Australian company making their Bitcoin purchases. It doesn't stop just here in America, gang. It's happening in Sweden. It's happening in Australia. It's going to be happening in India soon. It's happening everywhere. So watch out. Things are coming quick. And then we had one more other piece of news. We talked about this briefly this morning. The publicly traded Genius Group plans to distribute their potential lawsuit winnings, which, remember, could be up to $1 billion. They're planning to use it, 50% of it, to expand their Bitcoin treasury. They plan to acquire over 1,000 BTC by the year's end. So guys, gals, what else do you need to see? The writing is clearly on the wall. This is an arms race, but not for weapons, but for Bitcoin, the ultimate financial weapon and asset to help combat the rising inflation that we are seeing across the globe. The M2 money supply is going out of whack, and the only, or the best way to combat it, I should say, is orange coin. So make sure you're doing your research and getting yours. We're going to take a quick break. When we're back, we're going to do another market rundown. Let's see how the markets have been moving this morning. I saw Bitcoin's on a little bit of an uptick. We'll talk about that and much more when we return to the Blockchain Report. Stay tuned. We'll be right back. All right, it's 9:46 a.m. on this Friday morning. Let's take a peek back at the markets and see how things are looking, and they're better. Ooh, okay. Since we had our market rundown this morning, Bitcoin was sitting in the $106,000 doldrums. Right now, it's pumped back up about $1,000. Right now, we're currently at $107,500. If you remember, we talked to our crypto wunderkind and resident chart shark, Luca Pagano, earlier this week, and he said if we can end this week on a high note and hold around this 107-100K mark, we might see some big action pumping into early next week. So the fact that we're at 107,500 right now, Very, very good. I like where things are heading moving into this weekend. In other news, Ethereum not seeing quite the same jump, but hanging around that $2,400, $30 mark. Not a lot happening there. Trying to get back above that resistance and support level at about 2,500, which we saw it sitting at for a couple of weeks. But during that recent downturn the weekend before, or last weekend with the Iran-Israel strikes, we have seen it take a bit of a hit right now and still sitting below that mark. XRP, also a little bit of a pump this morning up to 211. I think it was around 207 earlier, so up a couple percent. Cardano also up a little bit this morning, sitting at around 55, 56 cents a coin. And Dogecoin still doing a whole lot of nothing, but sitting right above 16 cents a pop. Let's see if TradFi has had a similar uptick this morning. The Dow Jones having a nice day, up about 1.5% almost 550 bucks. NASDAQ Composites up 0.5% this morning, and the S&P up almost 0.7%. So we're seeing some not huge, but steady gains across the board. I don't think anyone can complain about that. MicroStrategy is up almost $9 or 2.5% this morning. It saw Bitcoin pump a little bit, and it said, hey guys, wait for me. I'm coming too. So Michael Saylor feeling good heading into the weekend. Coinbase has mitigated some of those declines we saw earlier today. It was down nearly 7% only about an hour and a half ago. Currently, it's down about 4.5%, 5%, so it's certainly recouped a few of those percentage points. Tesla is down about $1 this morning. Nvidia is up $2, and GameStop still sitting in that $23, $24 mark. Not a lot of movement there. All right, so we're taking one final break. When we're back, we're going to wrap up this week with a little bullish, bearish, or BS. Let's see and recap the top stories of the day and how those stories are going to relate to the price of Bitcoin as we head into this very pivotal weekend. So stay tuned, bullish, bearish, wrapping things up right after this. All right, boys and girls, it's that time of the week where we break down today's top 5 stories, figure out what's real, what's noise, and what is actually moving the Bitcoin needle. So first, the U.S. government is no longer sitting on the sidelines. They've confirmed they're actively planning to accumulate Bitcoin through a strategic reserve. The interagency plan involves Treasury, the Pentagon, and yes, the Office of Strategic Capital. Gang, I'm bullish on this. When the world's most powerful government signals it's about to start stacking sats, it sends a clear message. Bitcoin is not going away. It's becoming national infrastructure, baby. Price support doesn't get more institutional than that. The U.S. is buying Bitcoin. Are you bullish yet? Because you probably should be. Bullish to start. Uh-oh, I just spilled some water. In other news, Japan's Bitcoin mega hoarder Mega Planet just bought 4 more Bitcoin, bringing its total Bitcoin treasury to 12,345. Their new plan, accumulate 210,000 BTC by 2027. That's 1% of the total supply. I mean, how can you not be bullish on that? This is what corporate conviction looks like. Massive public accumulation along with a long-term plan puts a steady demand pressure on the world's most scarce asset. The more companies do this, the fewer coins are left for retail, which drives price up, baby. I'm bullish. Next, Barclays has decided to ban crypto buys using its credit cards, citing volatility and consumer risk. Meanwhile, U.S. and Hong Kong regulators are easing restrictions and leaning pro-crypto. I want to go BS, but I'm going to call BS in this. I almost want to go bearish, but this isn't about protecting consumers, gang. It's about control, okay? Barclays is doing what legacy banks do, and that's lashing out on that which they don't understand. Long term, it's irrelevant, okay? Bitcoin was built to bypass this type of gatekeeping. So Barclays banned Bitcoin, cool. They weren't invited to the party anyway. I'm calling BS. Next, Do Kwon might catch a legal break thanks to the Genius Act, which now redefines how stablecoins are treated. His charges hinge on old definitions, and the new law could shake that very foundation. Ooh, I'm going to call BS on this one too, okay? This isn't about Bitcoin. It's about one guy trying to lawyer his way out of a collapse he helped cause. If anything, it just proves the U.S. still doesn't know how to regulate crypto. No real price impact here. So Do Kwon's still trying to win in court, but Bitcoin, it don't care, so I'm calling BS. Last story we have is mining giant Canaan is ditching its AI chip business to focus fully on their Bitcoin stash. They're relocating production to the U.S. to reduce tariffs and avoid Chinese export crackdowns. I'm calling bullish on this, gang. I mean, shifting mining infrastructure to the U.S. strengthens Bitcoin's decentralization, it reduces geopolitical risk, and it signals long-term confidence in the network's future. More miners stateside equals more stability and more resilience for you and me. So I am bullish on that. All right, let's recap today. We have 3 bullish, 2 BS, and 0 bearish. So that means today is a bullish day, right? We're feeling bullish. The government's confirming it's actively accumulating Bitcoin. Metaplanet's doubling down on its treasury strategy. And Canaan is shifting mining production to the U.S. This all points to deepening institutional commitment and long-term infrastructure growth, baby. Meanwhile, Barclays is banning Bitcoin purchases as noise from a dying legacy system. And the Duquan legal circus is a sideshow with no real market impact. When 3 out of the top 5 stories directly strengthen Bitcoin's scarcity, security, and global legitimacy, it's not a vibe shift, it's a bull market bullprint, my gang. All right, as always, thanks for watching the Blockchain Report. Make sure you like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all the platforms in the world. There's a lot of them, and there's more every day. If you can post, we're probably on it, so make sure to see us there. I will see all you boys and girls next week for more Bitcoin bedlam and crypto chaos. Have a great weekend, and I will see all of you on Monday. Hodl on.